Hello, it is Monday the 7th of October. Hope everyone's doing okay. It's been a pretty choppy kind of nothing burger start to this week. I don't know about you though, I feel like I have a lot of anxiety at the moment. Everything seems really kind of not quite clear what's going on and where we're going next. And I keep looking for signs that we've really bottomed in Bitcoin and the bigger assets, but it's not clear yet. So let's take a look at why. If we look at where we are in Bitcoin, since the high that we made in March, we've been in this really choppy sideways correction. It's comfort, if we take a look at it on the weekly, we can call it a bullish flag, which is pretty comforting, but the fact is that we're not going up until we break out of it. We can look for the signs within it. I am a zigzag girl, so what I like to see is three wave corrections, especially ones that have a mathematical relationship to each other. So an equal measured move like we made here, a textbook one in Bitcoin, for me is a really bullish sign like this. You can see this swing and this swing are equal. We're equal at this low, and we had a really nice rally out of it. When you have an ABC move like this, usually your first target is the 786 fib. So if we put fib retrace levels on from this high to low, you can see from this lovely equal measured move, our high was exactly that 786 fib, and had we gone beyond that, that would have been a breakout then from this shorter flag pattern. We had really clear touches on the top. This would to confirm this trend line, and that would have been a really nice breakout. Problem with zigzags is they sometimes extend those, so you'll see this will be your first swing, then you'll do another one, and then you'll make a bigger three wave zigzag before you kind of get going. And that's kind of where I feel like we are with Bitcoin as well. They're not always simple. So if we're in an uptrend and we do three waves like this and then we carry on, that's really simple. One of the clearest things though you want to see for this to be confirmed is you want this little wave in the middle to be clearly three waves too. And my problem when I look at Bitcoin is I can't really see that here or in any of these swings. And what that usually means, so if we're in a big uptrend, sometimes you'll see a correction like this, and your three-wave correction will be like that. So instead of going like this, I'm drawing it wrong, up, down, normally, right, it would look like that, okay? Sometimes though, they stretch out and hang down, and that's kind of what I feel like we're doing with Bitcoin. So that means that this is our really strong uptrend. Here's our first swing, and this is our ABC, and this was our third swing. So I was watching then for signs that this is a bottom and we're going to see a really strong move, break out of this flag, everything's good. And we've had a little bit of a pause. If I extend, when you have a big choppy overlapping correction like this, you put your fib retrace levels over the whole swing. And I was looking, we reversed here at the 61.8 level. I was looking for this to make a Gartley, continue a little bit higher, maybe at least up to here to the top of the channel. So far we haven't, but it's been a really nice kind of shallow pullback here. The problem for me is this is also looking like a three-wave corrective move, and if I measure from here to here to here, you can see we haven't got to our equal measure move. This is my target up here, but if we fall back underneath this 61.8 level at 62,400, I think that this will be done and we will see a bigger pullback. So we're sitting really on pretty key support here. So I'm looking for it to push higher from here. The problem is if I go down to the daily, as you know, most corrections, I like to see sort of 5 waves up, 3 waves back. If we look from the low that we made on the 6th of September, we could argue we've gone 5 waves up. The problem is that this drop here is just in 1. We kind of need it to be 3, or at least a nice little zigzag before we go up again. And so I don't feel like we've done enough. Now, we could do it like this and go a little bit sideways. That would be good. And then continue higher and we hold this support. But there's also a risk, that we do a bigger 1, 2, 3 like this before we're done. And as you know, if we do that, and this then becomes a big three-wave move. We could actually see an even deeper pullback than that. That would mean from this low, because this would be a zigzag, the most likely retrace would be back down to these lows in 52,900 and a 786 fib retrace. So I'm a little bit nervous. The bullish pattern here, to be honest, would be a 50% retrace, which is here in the middle, and a nice little equal measured move down to that, because that absolutely is my favorite trading pattern. So if this is our first swing lower, from low to high here, we're looking for a lower high and where that lines up. And you can see if this is the high here at this daily 200 moving average, and we make a very nice zigzag down to this 50% retrace, that for me, like, I'm going to back up the truck. And where does that price come in? 57,900, so basically 58,000 here in the middle. Again, that's 50% retrace from the low that we made on the 5th of August and a three-wave correction back. That would be a very bullish zigzag. Now, have we done that before? If we go back, like, here we are stuck trying to get back above that 200-day moving average. And if we go back to 2023, you can see we made a very similar pattern. We made a high here in April, a bit like our high in March. We did a big zigzag sideways, couldn't break the new highs, and ended up being a bigger three-wave correction. And then, so this was the low here at the beginning of September, and here we are at the beginning of October, which is kind of around where we are here, and trying to get above the 200-day moving average, and it couldn't. And when we look at what we did from the lows, it looks very much like a bearish zigzag, doesn't it? But what we did here was a very nice three-wave back. If we measure from the low, exactly 50% equal measured move, and then we took off, and then boy, we didn't look back when we did that here. So if we could do the same pattern here this time, and we could hold that kind of 50% retrace on this 58,000 level, I'll be very happy. If we can't hold 58,000, again, we could see a retest of these lows around 53,000, the mid 53,000s. So for now, it's very choppy sideways in the middle, and there are so many coins and tokens and assets that I've seen trying to rally that have made this three-wave pattern on different time frames. So it's not quite the bullish reversal that I was hoping to see. Yeah, let's take a look at ETH. ETH might be a little bit ahead of Bitcoin. The problem with ETH, again, big picture, if we look at fib retraces, we've done one of those 68 golden ratio zones where we bounce from a 68 retrace. It's very messy. Our target was this 38.2 at 2,500. We couldn't get above it, double topped, and here we are back at this pivot level here in the middle of this 50%. So 50% retrace of the entire rally from the beginning of September to the end of September. And we're sideways right at the middle. All of our hourly moving averages are bunched up here. And if we look at where we are on the daily, all of our important daily moving averages of 20 and 50 are bunched up here as well. And when I look at this drop, it's very similar to Bitcoin. Again, we could argue this is 5 ways up, but we've done this really nasty drop in a oneer, and we kind of need 3 waves or a bottoming pattern to get excited about buying it, unfortunately, in ETH. If we can hold 2,400 and this pivot level in the middle, I'd like just to have another go at these moving averages. I tried to buy it here thinking that we could maybe blast through it this week on Sunday. We haven't been able to, and if we look lower time frame, here on the 4 hour, you can see this is starting to look like a nasty 3-wave pattern, is it? And so this is key support in ETH. If we can't hold 2,440, the most likely thing we're going to do in the first support from the rally from this low would be a pattern down here to 2,275. Retest this level and see if we can find support here. You know, when you look at this and when all of your moving averages bunch up in the middle, you don't have a trend. It becomes a sideways range, and we've got a really nasty big sideways range going on here in ETH as we try and bottom, and we're just not quite got the bottoming pattern. We need to kind of go in with much more conviction. Just the reason is that we could, when you're making these 3 waves corrections, you could retest the lows or even head lower. It's not a sign that we have bottomed. Now, when I look at this on a weekly, I really do like this weekly 200 moving average, and it's a really great place for ETH to find support and reverse, but yeah, just not the bullish chart that we need to see. Short term then, I have to say for now, let's just get a better bottom setup. We just haven't got it yet. I liked buying it here because this was a very nice 3-wave move, but we're still in this choppy sideways 3-wave corrective moves going on. I got this year completely wrong because I really thought that the gaming coins and tokens would be the kind of next big thing, but it is, of course, meme coins. I cannot tell you how much fun they are to trade, but they are really risky. Many of them fail. Many of them, I think they're really good fun to learn to trade because the bigger institutions and the more manipulative computer trading against you doesn't exist in these little meme coins. So the technicals work really well, but there is always someone selling a lot of them, and if you need to really read the trend and not think that they're gonna be long-term holds, you need to make your money and get out. And if you can do that, buy them cheap, then they are amazingly good trades and really good learning. So let's take a look at some of them. I'm going to start though with the big daddy of meme coins, which is Doge. And I have to say that Doge is just like Bitcoin, looks like it's made a very 3-wave rally, rejected at the daily 200 moving average, which has previously been pretty tough support and resistance. This is a weekly 200 moving average, sorry, and this looks to me just like a 3-wave correction, which means we haven't quite bottomed yet in Doge, and it looks like we're rolling over and then we're a little bit sideways. And so this is very similar pattern to what we just looked like in ETH. 3 waves up, 3 waves back, and a final leg higher. And this drop that we made from the high on Saturday isn't a one-er. We really kind of need to see this being 3 waves before we can buy it and think about another swing higher. So again, when you have a 3-wave correction like this, you put your 3 retrace fib levels on both swings. We've had a bounce. I wouldn't be surprised to see another bounce lower at some point when this rolls over and down to 0.09, and then we'll see if that holds for more upside. So unfortunately, not quite piling into this one yet either. Some stuff looks a little bit better. This is WIF. So big picture, this is a newly little minted 200-day moving average here, which is really good to see WIF breaking above it, and it kind of looks like 3 waves higher. And it looks like we're breaking out from this wedge. This is narrowing, right? So big picture, we've got 3 waves up, 3 waves back, and we're trying to make a bottom here. And one thing I've learned, that when you have a wedge like this where it narrows in and tightens up and you break out, very often your first target is where the parallel channel is. So if we were to draw along the bottom here, and we were to draw this as a parallel channel, let's connect it to the highs like this, that usually makes the first target, which would mean our first target would be somewhere up here on this blue line. We could also, with a declining wedge like this, look for a wolf wave. So everyone's going to go, what's a wolf wave? This is a wolf wave. So when you have a 5-wave declining wedge like this, you draw a line from the bottom of wave 1 and you connect it to the top of wave 4, and along that line will be your target. It's called a bullish wolf wave. A guy who traded futures invented it. And the bearish ones work really well as well. So if we were going to apply that here in this declining wedge in width, so here's our first swing, second swing, third swing, fourth swing, fifth. So we connect a line from the bottom of this wave 1 to the top here of this wave 4. So look, 1, 2, 3, 4, 5. Let's change the color. So bit garish. There we go. So there, if we connect it like this, so our target is going to be somewhere along here, which is where these lines connect. Let's put some fib retraces on and see if we can give ourselves a target this way as well, from this high to low. And if we do that here, oh look, there's a very kind of around this messy 61.8 then. I think if we can continue to break out, and what I like actually when I draw these fibs in here is how these levels so far have been really well respected. So we've gone from the high in April to the low that we made in August. This 236 fib caused a big reaction, double top and a really deep retrace. This 38.2 also really deep retrace to back test this 236 fib. So now if we're going to keep going higher, it's like a ladder. We're going to look for, oops, I need to put that back. We're going to look for this 38.2 that if we have really broken out above it to hold as support, and we keep going higher just the same way that we did when we back tested this 236 fib. So that means 2.52 in width really is kind of ideal pullback support, and back underneath it would be a little bit of a false breakout, and we're going to look level to level to level. So 2.97 and then 3.4, and then around here 3.4, maybe a little bit higher. That's where we are going to be potentially running into a little bit of trouble, because that's our kind of target on this breakout up here, 3.4 to 3.6. So that's Hang Seng Whiff, and so Doge is a little bit, yeah, not so, but this one's looking pretty good. And yeah, so let's see if 2.52 can hold and we continue higher. 2.97 and 3.42 next in width. I traded Pepe at the weekend as well. That was quite a fun trade. Quite a lot of them were making very nice similar patterns. 5 waves up, 3 waves back, and they've now made kind of bigger ABCs. One that's pushing higher at the moment is Sui. I tweeted a chart of this. Let's go to the weekly in Sui. And here we are, new high. So we had this high, we had a little bit of trouble here. I'd like to see us push, if we're going to repeat the pattern, kind of push beyond this. So I've drawn I think this is a big ABC. So we have a big rally, and then we go A, B, C. So I've put my fib from the top of the A, start of A to the bottom of C. And so I have a little bit of fib target and a measured move target if we keep going between 2.4 and 2.44. But we really need to hold above this high, ideally, if we're going to keep trending, and we're going to be bearish underneath this low here at 1.8. So this is ideal support if we pull back into it to keep going higher in Sui. That's our target, and we're going to be bearish if we fall back, and this would be a false retest, a false break back underneath 1.8. We're going to see a bigger pullback and a bigger 3-wave move. So looking really good for more upside, and that would be my first target. Now we could keep going 2.9 after that, and 3.5 even. This is just my first target, and then I watched the reaction there. So mood, everyone's talking about how Mudang's died. There's quite a funny tweet about this. So let me find Mudang, and because this is a really big declining wedge. Let's put this up, go up to a daily and look at Mudang, because we've done a really nice retest of the lows. You know, just bare eye, you can see that this was a really nice strong trend, and this was a choppy overlapping correction, I think, in Mudang, this fallback. What I kind of am interested about this level here is if we look at it on the daily, and we measure this first swing low to high, project it from here, which is a very nice 3-wave move. You can see we've held the equal measured move level. So potentially this could be it. Look, we've gone with that lovely 3-wave move. We've got 5 waves down here. And if we look at the 4-hour, for me, this 4-hour 20 and this third touch of this trend line from the high is, I'm going to say, a breakout level. It would also mean in Mudang we would be breaking these highs. And would we see another swing higher? Yeah, because remember, most market moves, even the new ones, they're three waves. So here's our first one, our pullback. We should see another swing higher here. And we can kind of measure where we would go if we broke out. We'll measure this first swing, low to high. We'll project it from the bottom here. And we would be looking up here around 0.2598. First swing maybe higher. Beyond that, and a retest of the highs in a big sideways range. So moving, I'm looking for a close above these highs and a close above 0.14 for a bigger swing higher. And again, when you have a big correction like this, you put fibs over both swings, high to low. So second target is going to be this 236 fib, then 0.197, and then the big 50% here at 0.22, and so on. We'll go level to level to level as long as we kind of validate this 236 fib. That's what I'm looking at. So yeah, I think it's funny. Mudeng is not dead. And you know, these new coins, when they first start, it's very common for them to go sideways in a big trading range like this. So if you're buying it down here and you like this one, and let's face it, that's all the fundamentals you kind of need for these. Do you think it's cute or not? Yeah, break above these highs and a breakout, Mudeng could put some moves on. So if you have TradingView on your phone, you can put an alert on this trend line, so when it touches it, you'll get a notification on your phone. I haven't done it here, let's do it. You can do it on any trend line like this, so we could go like this. I'll just line them up, and then, or you can put an alert on the moving average. Add alert on trend line, great, and then I get an alert on my phone when Mudeng's going higher or above this moving average, and then I can decide if I want to jump in or not, or if I've missed it and it's gone too far. That's how I like to do it. So there's a chart I tweeted as well that I really like, which is Aptos, which has made a really big ABC, and I think is a really nice cheap bullish reversal setting up as well. I'm just going to take a look as well at a couple of chart requests tonight. Where is Aptos? I didn't prepare well enough here. Okay. First request I've got tonight is GRT. Now, this one, we could argue this is the look of making a very nice three-wave correction, doesn't it? When I measure them, they're not quite equal. Let's see how close we are. Yeah, we're a little bit sideways at the 61.8, aren't we? So when that happens, what I like to do is I like to look at fib retrace levels. So I'm going to measure from the low that we made in November 2022 in GRT to this high. And this is a really interesting pattern. When you make your first swing to a 61.8 fib and you do that golden ratio zone thing where you bounce from the 61.8 to the 38.2 and then you do another swing lower, if your second swing then goes to the 7.86, that's a pretty classic bullish Gartley pattern, or bearish Gartley pattern if it's the other way up. Let me find one. Let me find an example of one. Here we go. Thank you, Investopedia. Okay, so from the low that we made, look, if your first swing is here to the 61.8, use bounce, and the second one, look, is the 7.86. This is always the 61.8 here. This is a bullish Gartley pattern. It's a trend continuation pattern. It's been around since the book in 1922. For me, when I draw them like this, so we're bouncing from this 7.86. It's also a really nice kind of trend line level from this low. Three-wave correction. The confirmation that you've reversed is back above the 61.8. The first target is a retest of the 38.2. So we can say that in GRT, if we can close and hold above 0.217, our first target is going to be 0.322, and then above that, you know, we're looking for new highs and another big swing higher. And then we can say, well, here's our first swing, here's our five waves, here's our 3-wave pullback, and we're going to measure for another new high target from this low. So we measure from this low to high, projected from our 3-wave correction. So second target becomes here at 0.4, then 0.575, and if we go in a big wave 3 here, potentially all the way up 0.85. So not a bullish reversal, not going up unless we can take out this 0.217, and we can see big deal support and resistance in this one as well. Highs and highs and lows and highs. So that's the level to beat. Short term, if I go down to the daily, I have to say it's a little bit worrying that this, again, like everything else, every other chart I look like, this looks like we've just made another 3-wave correction. If I measure them, this was textbook equal, and we're back underneath this 61.8, which I would have wanted to see as support. And so I'm afraid I don't think that this is quite the bottom we need to see, and we may need to go a little bit more sideways. This is starting to look not like a bullish reversal. So again, be patient. If you're not checking it every day, put a price up here or an alert. But yeah, if everything makes another swing lower and retest the lows, then I'm afraid this one probably will as well, just based on these corrective patterns that it's making. So the other request was for near, and so I'm afraid it's really similar, except from the lows that we made last year in August 2023 to this high. Again, this is a very nice look 3-wave correction. First swing was a 50%, second swing down to this 61.8. It's all kind of really bullish, but all of our weekly moving averages are sideways a little bit, you know. This is not an uptrend or a bottom yet until we break out of this pattern. Lower time frame, I have to say that this is a bit like Bitcoin. We just got rejected again, daily 200 moving average, and we've dropped. Potentially in just one swing, we might need another one before we go up again. So because this is kind of if we go zoom out a bit, because we're from this low to this high, we're in this 61.8, 38.2 sideways zone. This whole box, you know, for me is where the bulls and the bears fight it out. It's like the chop zone between. So a hold above 5.9, 7.05, and then above 7.05. This bull flag's broken and we're on our way up again in the next swing. But those would be my short-term targets. And if you're trading it speculatively here, you're really going to be looking just for a retest of a highs in this 5.9 level until we can kind of break out of here. And we need to be careful, you know, the problem with these things, you can go quite a long time sideways in this little range. So underneath the 200-day moving average, not quite the bullish bottoming pattern we want. Does it look good? Everything does, bigger picture. You know, it looks like very clear corrective patterns. It's just I'm not quite sure that we're ready to go yet. You know, it's very common in crypto, isn't it, to make a double bottom or a retest of the lows. I wouldn't rule that out, and I wouldn't rule out, you know, a run up here and then even another swing lower, maybe down to here. So until we break out above 7.5, we're not for sure in our next swing higher even then. So looking good. It's a lovely pullback to these weekly moving averages. So far we're holding above them, but above 5.9 would really seal it for me. In fact, I like this one a lot for another bigger swing higher. If we think from this low, this is a nice big wave 1, wave 2, then this next one should be really strong. It's just not quite clear we're ready to go yet. Okay, I hope that's useful. Let me know if there's anything you'd like me to look at.